This is episode 115 of Zen and the Art of Real Estate Investing with my guest, Thomas Castelli. Thomas is an accountant with Hall CPA. He helps real estate investors and business owners reduce taxes and build wealth. I know you think that sounds easy, but it's not easy. He's also the founder of New Babylon Capital, a holding company for his investments. Thomas, welcome to the show.
Thanks for having me, Jonathan. Honored to be here today with you.
Yeah, I'm excited to talk to you. We were just talking about on the pre-call, and I was joking that there's no amount of tax episodes that can't help people. Do you agree with that?
Yeah, no, I have to agree with that. Real estate tax is very in depth, so there's always more to talk about.
Yeah, and I think most investors are used to general accountants, which I've talked about before, which seem like, oh, sure, they're going to get my taxes done, but that doesn't mean they're going to maximize real estate investment benefits and long-term cycles of what you want to do with in your investments. Is that kind of where you found your niche along the way as an accountant?
Yeah, it really was like kind of twofold for us. It was the focus on real estate tax, which is something that not many people dive deep into, and also combined with the fact that we give tax advice, proactive tax advice, and planning to actually help people reduce taxes, whereas most CPAs, especially generalists, tend to just file your tax return, give you your forms, send you on your way, and that's about it. They'll see you next year. So those two things have been where our niche is.
Yeah. Do you feel like if you had to choose between the two, do you find that investors, at least that you work with, are more lackluster keeping the books? This could be both, or more lackluster planning those investments for the future.
Hmm. That's a great question. I think bookkeeping, I'm gonna give the slight edge to it because this is a tedious, repetitive task that
Yeah.
most entrepreneurial people just don't want to do, and it is a cost to get it done. Whether you outsource it to like a freelancer or a part-time bookkeeper or an accounting firm, that is one of the things that we often have to nudge investors to take care of because it does actually help you not only reduce your taxes to make sure because you're actually capitalizing on all the deductions you have. You can do better tax planning, but also helps you make better financial decisions. So we do see that. Um, I'd say people are probably, a little bit more proactive on their investment side, but that's not too far behind bookkeeping, I have to say.
Yeah. And I mean, the more units, the more tax consequences. So as people scale up, that's when they really need to dig in. On the first one, you can get away with some things. Maybe you're not maximizing, you're
Right.
not going to be at a big loss. But when you're looking at depreciation over, a bunch of different multifamilies, there's a lot of options there.
Absolutely. There's a lot, especially the bigger the properties, the bigger your investments, the more tax advantages there are for you. There's also the more risk that you get it wrong if you don't do the right thing, just because the numbers are so large. So.
When was the first time that you were interested just in real estate as an entity?
I would have to say probably back in like 2012. So I was going to college to become an accountant. And I kind of realized along that way that probably wasn't going to get me truly to where I wanted to be. So I started picking up books. Rich Dad Poor Dad was one of the first ones, and the rabbit hole went pretty deep from there. So I started like attending different meetings and networking events, and I eventually met a group of people who were doing a 3-day weekend on real estate syndication. So I went to their 3-day weekend, learned the entire business from A to Z, kind of through that like crash course, if you will, and really fell in love with that business model. So started attending their monthly meetings, and that's how I kind of got involved. Eventually, made my first LP investment, and then a mentor from that group ended up saying, "Hey, if you find a deal, we'll syndicate it." So started banging the phones, networking with brokers. Long story short, someone ended up sending me a deal that penciled out and we ended up syndicating it. So that's kind of how I got into real estate. That was around between 2012 to around 2015. All that transpired, and really by 2015, I was in the game.
Yeah. Is there some benefit that you were looking at in your mind as a tax consequence to syndications as opposed to just buying your own multifamilies?
Yeah, believe it or not, tax wasn't the first thing on my mind when I was looking at this.
Well, you read Rich Dad Poor Dad, so you're like in go mode. Like, I want to get some stuff.
Yeah,
This is there. Yeah.
and I saw it was just the ability to build a lot of wealth through real estate and syndication. For me, the reason why I think that maybe hit a nerve is, I was a young guy, and I didn't have much capital. So I was like, okay, great, I can go raise money and we can get these deals done, and that's how I can get my foot in the game. So that's kind of what motivated me to do it. I'd say the tax benefits were maybe what piqued my interest into real estate to begin with, but I can't say that had a specific impact on syndication versus otherwise.
Yeah, and I think people are, rightfully trying to figure out when that income then equals, from passive into what they were making. But then that doesn't mean that it's still the right time
Right.
to go. You're an expert in your employment, and you're
Yeah.
still learning and investing. So I think that's always been a hard thing. But also maximizing the taxes on the properties that you own and using depreciation correctly can help you get there quicker. Is that fair to say? And I think I mean, I know from my own personal experience, I'm a complete failure at that. I just don't like taxes. I feel like it's exactly like you said before. One, I know I'm gonna have to pay a bunch of money. And two, I don't really want to go through the minutia. I just want someone to just read my mind
Yeah.
and figure
Right.
out where all the stuff is supposed to go, which means have a bookkeeper.
Right, right. No, no, absolutely. I think so just by being in the game of real estate and starting to invest in rental real estate specifically, you're putting yourself at a good in a good position from a tax perspective because to your point, real depreciation, which is a non-cash expense, can help shield your rental income from tax. Despite the fact that you might be generating positive cash flow. So you could be putting money, cash into your pocket and telling the IRS that you have a loss, right? And that means you're not paying tax on your rental income. So you already have a more tax advantaged stream versus say earned income, which is generated from a job or a business. You're typically paying up to 30%, 7% tax at the federal level. In some cases, self-employment tax and or FICA taxes if you have a job. And then state taxes, it's not the most efficient source of income and very difficult to shelter. Whereas real estate, it's easier to shelter. So just by being in real estate, you're putting yourself in a good position. I will say one more thing here is that even if you're looking to ways to reduce taxes on your earned income, real estate can be the way to do that as well.